Not about the law, it's more about enforcement. And many of these issues that we're facing is facing internationally. Our real problem is our economy isn't growing fast enough. And we need the money. The real money is going to come from the growth.
Avoiding a ratings downgrade remains vital, as it may negatively affect the tax revenue target.
A downgrade to junk status simply means that the borrowing cost of government will increase sharply. And what does that mean to the men on the street? So first thing that happens is, because state-owned entities and the government are now borrowing at a higher cost, there's always a risk that services delivered by state-owned entities are going to increase sharply. So there's an inflationary aspect. The second aspect that follows through is government's wage settlements with unions are largely dependent on inflation. So once we are in a higher inflation trajectory, it means government is obliged to make a higher wage bill settlements to its workers, which creates a cycle of higher wage bill costs. So basically, because the tax base is becoming increasingly fragile, if we are downgraded, that means our ability to collect tax revenues buoyantly becomes increasingly under question.
African Revenue Services works towards a 1.1 trillion rand target for this financial year. The tough job of keeping a tight lid on government spending still remains with the Finance Minister. Naledi Ngobo, SABC News, Johannesburg.
Well, let's discuss this midterm budget. We're previewing it tonight. We're joined by Lesiba Mothata from Investment Solutions. Great to have you with us.
Hi, Francis.
So, given all the pressures, we want our finance minister to be something of a magician, basically. But I guess he can only work with what he's got. What are you expecting?
I expect the minister to show that South Africa will continue on the path that has been established in the last 20 years. There's a lot of angst that's been felt about this particular budget. Investors are looking at it in a very particular way. And I think the minister has a task to secure that which we have built over many years, that South Africa is not going to be off the rails in terms of expenditure. Nor will it be on debt accumulation. Nor will it deviate from its policies even around making sure that institutions like the central bank, which are under the mandate of the Treasury, are changing course. I think he's going to affirm the financial architecture that has been built over 20 years for this particular country.
Okay, so keep stability, say that we're not going to spend too much, we're going to rein in that debt. Are you expecting any surprises at all?
Surprises, not so much, because now it will be the third time the minister has shown a ceiling in expenditure. And each time it's announced it's lower, which means that it's a prudent fiscal management that we find. And also the GDP growth forecasts, although the 2016 number is weak, 0.5, 0.6 at the best estimate, the one that comes after that, 2017-18, is likely to show some improvements because mainly of the external factor. The Chinese slowdown seemingly to have slowed. Exports growth is I think is sustainable from that trade balance that we've seen in the second quarter. It's likely to proceed in the medium term. So we're going to talk about growth that's around 2%, which will be better than when we sat down in February. I think that's going to be very material in making sure that the upbeatness of this budget is slightly different from the one that we've seen in February.
And the deficit, 3.4%, is it fair enough to say that's what the market is expecting? It'll be problematic if he targets anything bigger than that.
At best, we're going to find even lower estimates. Remember, they're a tax authority. I'm of the opinion that they will express some taxes. The February outcome was a tax-light situation. They could do a tax-heavy outcome here. This conversation between business and labor and the state, in it includes a conversation about hiking taxes. I won't be surprised if there's an indication of corporate taxes going up. Whether it contributes to growth or not is a debatable outcome. It certainly doesn't contribute to growth, but in this context, where we're trying to salvage a country away from a so-called junk rating, it's not impossible to consider that situation.
Okay, so that's interesting because this is a big debate. Are we going to see tax hikes hinted at? So you say maybe corporate tax. What about VAT that we were talking about a couple of years ago?
It just doesn't have political support at this stage. Notwithstanding, we're seeing retail sales growth actually weakening quite materially, which means that although wage growth, we're seeing it around 7%, it could average around 8% unit labor costs in the country. There's just an upward pressure on wages. But despite that, we're finding that retail activity has slowed. It's not a good time to think about VAT at this point in time. It could contribute to a recession in the country if you do that from a fiscal authority's point of view. Remember, more than 60% of GDP from the expenditure side, it really is from retail, and you wouldn't want to kick a dying horse, so to speak, at this point in time.
Even if Pravin Gordhan says all the right things tomorrow, is there a problem with confidence? He can't force the rest of the executive to follow through on this budget. Already promises have been made around education that weren't in the February budget. Is that a problem? Especially since he's got charges hanging over his head, even though the market's not thinking he will go right now.
There's some negative cloud around this. And although there is such, it is very clear that there are a lot more people that understand the consequences of having decisions that are different from what we had in the last 20 years. There's a lot more people that get that. And I think with him leading this charge, so to speak, he's going to demonstrate stability, that in a nutshell, South Africa is not a banana republic. Although we have our own issues, relative to other countries, they call the Fragile Five, which will include Indonesia, Turkey, Brazil. If you do an analysis, a relative analysis with those countries, which rating agencies will look at, we don't look particularly worse off relative to the others. In fact, on measures of debt management, about 90% remains that which is issued in domestic currency. Only 10% is in foreign denominated. The so-called junk is related to that 10%. When you just look at the matrices, especially when you compare it to countries like Turkey more specifically, that has a foreign denominated debt stock that is higher, when you compare the two countries, you do find that it's not an easy decision for Standard & Poor's to come and say South Africa is non-investment grade, barring decisions that could be adverse from the political front.
That's interesting. So we issue a lot of debt in rands, and that actually has a much higher credit rating. But this talk of junk status, it's also about confidence and things like that. But you're saying it's all relative to where we're positioned in the world, actually.
Number one. The second thing is countries or rating agencies, they love statistics, data. And when you look at statistics, we may find an improved GDP forecast from where we were in February. The current account deficit is now sitting at 3.1% of GDP. When you look at measures these are structural measures that we find ourselves on debt. I do think that the National Treasury gets it. I wouldn't expect an outcome where gross debt, which is now 53% of GDP, is going to go higher. I will expect it projected lower going forward because it is quite an important number to be looked at. Just when you look at the statistics, it's not a slam dunk decision that SA ought to be non-investment grade.
Okay, I like this outlook, and let's see. Tomorrow, you're saying maybe corporate taxes. We'll wait and see. That was Lesiba Mothata from Investment Solutions. And of course, we'll bring you the midterm budget speech live tomorrow. Lots of analysis and interviews. After the break, we take a look at developments at the Black Business Council today and your financial indicators.